We've got Mr. Bhandari of Thermax also joining us. They've got their path that slipped marginally this time around, exceptional items there at play, and the order book also indicating a broad-based recovery. So let's discuss that a little bit further. Mr. Bhandari, good morning. Take us through the details. On the exceptional items in particular, there is an impairment of goodwill in Thermax Netherlands BV and a reversal of part of the provision from the closure of the German subsidiary. Just take us through some of the details there on the exceptional items.
Good morning, Aisha, Abha and Ayan. It's a pleasure to be here. The earnings, as you saw, were showing a broad-based recovery across all segments in India, and we showed positive movement on all fronts, on orders, on revenue, and on our profitability as well. Specific to our international operations and specific to our German subsidiary, this is relating to two things. First, there is a portion of business that we have divested. It's a business relating to services that we had acquired quite some time ago. And as the industry has moved with the changes relating to energy transition, we decided it was best to get out of that portion of the business. We found a buyer. And so that was one part of it. Second, as a matter of continuing operations, we continuously look at our business and analyze whether the asset book is sufficiently justified relating to the forward earnings outlook that we have. With our international subsidiary, we did not think that was the case. So basis the feedback from our accountants, we took a write down on the asset itself. Hope that answers your question.
In terms of segments, you touched upon energy. What about environment? Because that's the pocket that's been registering growth, and in terms of going forward from here, do you feel segmentally that's really the pocket that's going to lead?
Look, I think we're seeing strength in all portions of our business right now. Energy, environment, chemicals, all three. Chemicals driven by a fair amount of exports and a general demand for high-performance chemicals is showing our highest growth across all segments. On environment as well, driven by larger movements in the industry, we are seeing strength. And specifically this year, we think after all the little bit of a slowdown last year in some of the pollution law implementations relating to FGD projects, we do see acceleration in these projects in this coming year. So we expect to see further improvement on the environmental side. The energy segment is driven primarily for us right now by green energy and biomass, waste heat recovery, spent wash and distilleries. So a variety of different applications, all of which are pointing towards new applications in new industries coming to the fore.
Ashish, what is it that you can tell us about the order inflows? Are they going to get impacted for at least a year as industrial and private capex would be on hold mode perhaps?
I think we may have had that worry 2-3 months ago, but I think generally right now you can see from our order book as well, we are right where we were last year. Last year we had a single order which was nearly 500 crores worth. This year we have one order which is slightly more than 300 crores. But net, I think across all our segments, all our data suggests that demand is back. And with the significant increase in capital expenditure that the government's going to be pushing in the coming months, and the strength that we see in steel, cement, pharma, chemicals, all the industries that we serve, difficult to say what the outlook may be several months from now or a year from now, but right now we are seeing a reasonable amount of strength here. So demand's not the issue right now. The challenge that we have is actually commodity price increases. And so we depend a lot on lot of our input products, steel in particular, and the sharp increase in prices of steel to the order of 30-40%, that's a bit of a concern.
Yeah, indeed it is. And, I must say that you're not alone. A lot of companies that we've been chatting with do believe that the commodity price uptick is going to definitely hamper their growth numbers going forward. So suffice to say that it's going to be a while before we actually see those double-digit margins kick in for you, because I'm guessing RM costs would bear heavy.
Partly, I think as we have an estimate of how much of it would get affected for next year, in many, many cases, we are also looking to increase prices. We are continuously working on improving our efficiency. And the one good thing the the last few months have helped us with is that you can operate at a slightly lower cost base than what we were operating previously. So I think the net impact of all of these moves will depend on how well we execute as a team. But it's not all gloom and doom by any means. I would look at it as more of an opportunity than a concern, net of everything.
Well, that's good to know. Glass half full, I guess, Ashish, is how you're looking at it. But I just want to get in a sense as to how you read into the announcements as well in the budget. I know you just spoke of the overall capex picking up, and that seems to be driving demand. But what have you particularly made of announcements within the infrastructure sector? Do you think enough measures have been announced in order to spur this growth revival that's much needed for the economy?
I think the government's done everything that it could. Yep, to take a budget deficit which is well beyond what we would have considered the norm previously, looking to spend 5.5 lakh crores on capex next year was a very bold move. Even in the sectors that are directly affecting Thermax, we are seeing big movements on the hydrogen mission that was being announced, urban water, urban air are big areas. Then you see textiles, big announcements. So overall, I would say we couldn't have asked for more. I think it now comes back to the industry to be able to deliver, manage inflation, manage costs, and focus on executing projects that will come our way.
Okay, fair enough. And break it down for us in terms of the international business, how that has fared vis-a-vis your domestic business.
So both have shown reasonable strength. Our international business is about 1/3 of overall Thermax, but I think it can be a lot more. And especially Southeast Asia, we would like that to be a second home for Thermax. There, I don't think we have done as well as we would like, but that's an area that we will continue to focus on because we see a lot of similarity between the markets, and a lot of our products are products that can fit in very well out there. So that's an area of improvement for us. I shared a little bit of the bad news we had on our international European operations. In the US, with chemicals, we see a lot of strength. But overall, I think while our numbers continue to be in that 1/3 international, 2/3 domestic, we see a lot more opportunity on the international front to do better as well.
Okay, fair enough. And I just want a flavor of the recent orders that you've bagged. You spoke about that large order worth 300 crores that has come in. What's in the pipeline right now? What can we expect on the order booking front?
So on the order booking front, as I said, continued strength across all segments. The good thing is we are not dependent on any one single big order, but general strength across segments. So even in the last quarter, our single one order was barely 20% of our order book. The remaining order book was comprised of a variety of different orders from a variety of different industries. On our channel side, which is our distribution network, we had one of our highest order intakes ever in our history. And so that gives me confidence that you have strength across sectors and across the geography. We expect that trend to continue in the coming months.
Okay, that sounds quite optimistic going forward. And just have you now seen a complete resumption of normalcy in your overall operations? What's the update on your capacities reopening, labor, supply chain? Safe to say that things are back to pre-COVID levels?
I think from an availability of labor perspective, from a capacity utilization, all back to pre-COVID levels, and in some cases exceeding pre-COVID levels as well. Yes.
Thanks so much, Ashish, for joining in and giving us a sense as to what the business environment has been like, outlook for the company, going back to pre-COVID levels, as well as your international business. The stock price of Thermax, 3.7% higher, 1,053, that's where it's currently at. Let's take a very quick break with news that we're at 14,750 on the index, with the broader market showing you a lot of resilience, up 1%.